Welcome to Business Talk right here on businesstech.co.za. I'm your host, Michael Avery, as always. And again, we're diving into the world of insurance. And often when you think of insurance, there's that old analogy. It's something that isn't really gone out and bought. It's sold. And in your mind, you probably drift to slow-moving monoliths, dense policy docs, and waiting in a long queue on the phone. But that picture is changing, and it's changing rapidly. I think we're seeing the convergence of insurance, of asset management, and of banking, creating a new frontier in financial services across the continent. And at the heart of this transformation is a man who's no stranger to balancing ledgers and these kinds of innovative strategies. Today, I'm joined by Yuresh Maharaj, who's the CEO of Standard Bank Insurance and Asset Management. He's a chartered accountant by training, former Liberty financial director, and someone who's played a really key role in shifting the gears of financial inclusion and innovation at one of Africa's largest banks. So, Yuresh, it's a great pleasure to have you on the platform to talk about a topic that really has moved from the backroom to the front and center, this dynamic shift in insurance. So maybe let's just start with the big picture, because the industry has this reputation for being conservative, traditional, maybe even sluggish. But over the past few years, it's been anything but that. What do you think is driving that acceleration of transformation in insurance in South Africa and across the region?
So, Michael, thanks very much, and thanks for having me. I think to your question, it's actually driven twofold. I think one is, as a financial services industry, the industry has sort of woken up to understand that there's holistic needs that needs to be fulfilled to our client base. And then on the other end of the spectrum, I think we've got clients who are a lot more savvy and a lot more demanding in terms of real-time meeting of their financial needs. So the convergence of organizations trying to meet these needs, as well as the customer base who's demanding more, is one that actually sees, which is great for the industry and equally great for the consumer.
And it almost reminds me, often when we think about the world that we live in, we use apps on a daily basis. We're always on our smartphones. You're on Spotify or whatever streaming platform. It suggests things for you. It knows you sometimes better than you think you know yourself. And so we start to expect these kinds of hyper-personalization, instant service levels from almost every provider that we interact with nowadays. But when you look at the context in South Africa and Africa, I think it is slightly different to what we see in more developed markets, because we know the socioeconomic pressures are mounting. We know there's deep inequality. We know we operate in a very politically uncertain environment. Do you think the insurance sector needs to reimagine its purpose in this society, perhaps moving from being a reactive safety net to something a bit more proactive, an enabler of financial resilience, if you will?
I think there's definitely a need, and I think equally, which is well known, and there's various stats that have been quoted, over the last decade around the insurance penetration levels, being South Africa being the most mature market, but equally much lower penetration across the continent. And the reason why I start there is I think if we want to, as a industry, actually want to uplift that, it starts with financial literacy education. And in that context of that education is, how do we actually get the financial literacy in the hands of the end consumer? And that can only be digitally enabled if you want to do the continental reach across Africa. And that's where we've invested over the last I would say 7 years as an organization, in terms of how do we create a digitally engaged platform, more not just around product solutions, but more around the appreciation for financial literacy. Equally, and what do I mean by financial literacy? What does savings and or sort of healthy savings habits actually promote for long-term sustainability in terms of retirement? And equally, what does the offerings or solutions around life protection do to preserve legacies? And so we've done that, and we've invested in that capability, which is a platform-orientated, equally app-enabled. And we do that from client bases, be institutional clients, where we actually engage with a workforce, to individual retail customers. Over the last year alone, we've touched about 400,000 active participants in these what we call financial literacy seminars. And in that context, it's more just an educational drive. However, what we have done is allowed those end recipients of the education to contact us should they feel that they want to have a one-on-one conversation.
I'm a big advocate of increasing financial literacy and financial education, and I almost think we need to start at primary school with life orientation. But what we see in society, you just look at the rise of online betting, and it's become almost a R1 trillion industry in South Africa, how much people are spending. And it just shows you there's still in South Africa a huge need for better financial literacy, because we actually should be spending that money, even if it's a couple of R100 a month, in a tax efficient vehicle, maybe an RA or something like that. Yet the behavior, if you look at the headline level, indicates otherwise. So tell me a little bit more about the appetite for financial learning and financial literacy. You said you've touched 400,000 members. How's that been received so far?
I think it's polarized in terms of the view. Some really appreciate it, but equally, the quite candid feedback is, well, we've got other short-term priorities, and this is something we should be thinking about in the next 15 or 20 years. And so, that's the sort of spectrum of feedback that we've received. And it does vary again to the age of cohort or participant. Those between, I would say, anywhere from 18 to 35, you get that type of, well, this is something I look at in the next 10, 15 years when I'm planning for retirement. Whereas you get those who are within the sort of 45 to 60 bracket says, I wish I had this conversation 15 years earlier. And that's the polarization that I call out. And so how we've actually dealt that is, again, rewinding back to the early stage cohorts who entry-level participants who are just finishing either a matriculation or into tertiary level. So that sort of 18 to 25 cohort is, we've realized in terms of those participants, gamification is a way to stimulate and to actually get them interested. And so in that regard, we've developed something particular for the South African market, which you may have heard of the brand called Stash. And that is, and so we've promoted that. And basically, it's a gamification principle, app enabled, but it's a very simple tool to, as the name suggests, stash your change that you would get at any retailer. So if you had to go buy a basket of goods for 48 Rand 50, and if you sort of pay at 50, the 1 Rand 50, you can opt to stash that money. And that effectively creates that culture of savings. And to your point, has the opportunity to put that into a simple tax-free savings vehicle, or you could do other needs like sort of simple insurance. And that in itself, has gained momentum over several years. And equally within that context, just in South Africa alone, and this is outside financial literacy. So, that's something that we've seen quite nicely and take off. So I think, the message is there's definitely a need out there. I think we have to reinvent ourselves and displace sort of traditional thinking in terms of how we actually bring this front and center in the age groups or cohorts that we're interacting with. And that's something that we experimented with and trying to get some traction in.
I think it's so refreshing to hear you say that, because it's been the big challenge, I think, in the broader retirement industry and savings industry for the longest time. How do you engage? How do you activate the motivation of young people who can't see themselves as 40, 50, or even 60 years old and saving for retirement and are always delaying those decisions? And, the later you start, the less you benefit, as we know, from the power of compounding. And so the more difficult it becomes. So it's so interesting to hear that you're using things like Stash and gamifying it. I mean, but you're also leading the insurance and asset management cluster within Africa's largest bank. I mean, that's extremely powerful. So how does this convergence of capabilities then benefit the customer? And what does it mean for the future of when we talk about integrated financial services? I mean, this is the perfect example of it.
No, I think, and as an organization, as Standard Bank Group, we believe that we're best placed to actually be what I refer to colloquially as a comprehensive player in financial services. It's the largest financial services group in the continent. It's got very mature banking capabilities. With the acquisition of Liberty 3 years ago and creating this fourth business unit that I have the privilege of running, we've now got mature capabilities across banking, insurance, investment, and asset management. And we've got the distribution capability to actually reach the end customer to provide the best holistic advice. We definitely feel we have a competitive advantage. Having said that, back to my original opening comment, it's great to have all these capabilities. However, how best we actually put these together so that we have one voice with the customer and one touch point to meet their needs. And I think the race is on, because I think the entire industry has woken up to, being a comprehensive solution provider to a client makes sense. I think the question is who actually masters the art of having one conversation holistically with the client. The client sees a seamless opportunity as one brand, but providing a basket of solutions and a brand that they trust in is going to be the winner, and ultimately augmented by digital capability to allow the efficiency and speed of execution. And that's what we're gearing up for as the Standard Bank Group.
It means a lot of dev work, I'm sure, in the background in integrating systems to ensure that you break through a lot of those silos and what you've been busy with for the last 7 years, I'm sure. But you also have the advantage, I think, strategically of being deeply invested in growth beyond South Africa. And so, as you said, biggest bank in the rest of Africa. How are you, as IAM, seeing the strategy play out in other African markets? Are you finding that you can bring some of those learnings and use things that maybe have worked in Kenya, for example, the large informal sector, to try and be a bridge to the township economy here? What are the biggest lessons you've learned from operating across such diverse jurisdictions?
I think the one is digital enablement is critical. And that's one where the reach to the end customer has to be through a device. Because having the infrastructure of the traditional branch network is one that is rapidly on a decline in the continent, and one that we're actually seeing so in South Africa itself. So hence, having a digitally enablable, scalable platform that is deployable in several countries is effectively the reach to the end customer. And particularly your reference point around East Africa, I think the sort of digital boom that has taken place, and particularly around the efficiency of payments, as an example, in that region, is something that we all can learn from. And so, for us, the key opportunity for us in the African markets is digitally enabled, and we actually have a digital insurance tech stack that we've built, which is centrally located but deployable and scalable across and we've deployed that into 9 countries already from an insurance asset management point of view. And based on customer needs, we're obviously deploying it, and we can redeploy it in several other countries. So I think they will have real-time processing, a reach for the customer base, and most importantly, it's a chassis that's universal. But again, we're under sort of no misillusion that we have to meet to the local needs of each client base. And so what's fit for purpose in South Africa, which may be a more mature insurance market, as I call that, is not fit for purpose for Kenya or for Southern Africa in Botswana and Namibia. But we're able to use the tech stack that we built to customize solutions and then deploy them. And our reach has been, particularly due to the insurance penetration, how do we actually deploy simple risk, simple savings products, educate the market with the literacy and the programs that we're driving, that we can increase that the product continuum to meet that client need as it becomes more sophisticated. So, that's been sort of our strategy of deployment, and one that we've seen early wins on, and one that we want to continue capitalize for years to come.
Well, once you've got that core chassis, as you say, that you've built, then you can augment that for the local context. I was in Mombasa a couple of years ago talking to an employee benefits conference, and it was interesting to hear what some of the trustees of pension funds and principal officers were saying about designing products for the Kenyan market, which is a market with high levels of informal employment, and it's kind of seasonal and lumpy. So they were thinking, well, how do we design products where you can side pocket, you might miss a couple of months, then come back in from a retirement savings perspective, and using lessons from M-Pesa to try and build on that and innovate, would be a very different conversation to what we'd be having in South Africa. Of course, we can't avoid the AI question. And I think artificial intelligence is just everywhere. It's more than a buzzword, clearly. It does have huge potential. How are you and your team thinking about artificial intelligence, automation, and not just as a tool, but as a driver of innovation across insurance and asset management?
So it's definitely topical and top of mind. And we spend a lot of time, already have spent a lot of time in the executive team, sort of plotting our path of where it makes sense to actually use those capabilities. I think, however, it has to start with, it is definitely a buzzword. And it's one that you could capitalize on, but it has to be framed within a responsible framework of utilization. And what I mean by that is you could use it, and particularly for the insurance or the investment players, you could use it across the spectrum of capabilities to enhance those capabilities. And I'll start with the opportunity for pricing, the opportunity for underwriting on a much more sophisticated basis or granular level with the interrogation of the level of data that insurance companies actually sit with. You could extend that to which becomes, some of the more easier wins around efficiency in your servicing capabilities. And then the fourth area that we see is how do we actually enable, because as we go up our solution spectrum, it has to be advice-led through a financial advisor network. How can we make our financial advisors more efficient so that they spend more time and have the right prompts to have a more complete, holistic conversation with their client, back to being a comprehensive player? So we see it within those four deployable areas within our business. And as I said, having said those, some are easier to accomplish than others, because within the framework of being responsible, there's obviously some social responsibility questions you have to think about when we look at sort of pricing or underwriting parameters that we'd use these capabilities for. And that's what we're navigating through at this point in time.
Yeah, absolutely. I know there have been some headlines about, ensuring that there's no bias in the way one uses these powerful tools, because often they're trained on historical data, and that data could have been extrapolated from a biased system. So you don't want to be perpetuating that bias into the future. Models have to be explainable. But I think it's a very exciting time. Anyone who's used any of the retail level tools, think about ChatGPT, for example, and you just see how conversationally it can really help from an empowerment and advice, a financial education perspective. I think people can now almost become even more empowered using these tools to augment what they're getting from financial advisors. Financial inclusion, though, remains, I think, probably one of the core developmental challenges across many African markets. So you mentioned a big component is financial advice for the group and financial education, and translating that into true empowerment. What role do you see the digital platform that you've built playing in that journey?
It's I would start off by saying, and I think you've made the point, I think AI and digital tools augment the capabilities of human-to-human connection in the context of being an advice-led distribution capability, if organizations hold those. And the reason why I say so is navigating through some of the complexity of some of financial planning or discipline or just life protection is based on a series of life events and sequences, and one that is not static. So in the context of, could an AI tool map out your path over the next 30 or 40 years? I think where we find ourselves today, I don't think that is achievable. And so having a toolkit that enables those conversations to have it to be more robust equally allows the financial advisor network to spend more time engaging with their clients and removing the administration and the compliance admin and giving them the right data on the profile of individual clients. That becomes really rich. So that's the way we see, AI and technology supporting our financial distribution network, but most importantly for the best needs of the client, because they actually get the real face-to-face human empathetic engagement, and equally builds a trust over a long series or a long time frame that I just articulated on life events. And that, I don't think you're going to build that rapport with a tech engine in due respect, in the short term.
Yeah. No, you still, and that's why I think a lot of the early fears were misplaced around, AI is going to come and take my job, or it's going to lead to this creative destruction, and what are we going to see in its wake? I really do see it as an augmentative tool, because in the financial world, we often talk about IRR and returns, but it's a deeply personal thing, talking about your money, talking about your dreams and hopes and aspirations for your children, education, healthcare. All of these things are deeply personal. And I just can't see robo-advice or bots or anything like that, or any LLM replacing the human element in all of this. Just finally, last one, speaking of the human element, I've got to ask you, Yuresh, you've worked across the industry, Hollard, Marsh, Nedbank, I can name almost all of them. What have you learned about leadership through times of great change that you're now applying in this new role here as CEO of Standard Bank Insurance and Asset Management?
Your best asset is your people. However, you only unlock the best out of your people if you actually empower them to do what's right for the end customer, and then be supportive as much as you can. And that's something which I've practiced over the last sort of decade and a half through my various roles, and one that I'll continue doing so, and which gives the individuals the opportunity to learn in their own career, personally, as well as to provide back to the organization and to meet their aspirational sort of goals in life, and equally unifies a leadership team that they feel empowered. They feel that they're not a takeoff of strategy, but they're one that they've given input into it, and equally then sees the gravitas when they actually get runs on the board, when they're allowed to execute in something. And so that's something which is maybe a very simple recipe, but one that I found very powerful, and one that I continue practicing on a day-to-day basis.
Yeah, well, you speak of runs on the board. You can see it, to take the cricketing analogy even further, in the recent test series over in England, between England and India, a young test captain stepping into the very big shoes of Virat Kohli. And Virat Kohli had that ability to empower his team around him, and they would tend to get over those big moments. I think Shubman Gill is maybe just learning that art as he starts out on his journey. I think great insights, and really for anyone who's navigating this intersection of financial transformation and technology and purpose, I think they would have gained a lot of real value from the discussion. Yuresh Maharaj, thank you very much, CEO of Standard Bank Insurance and Asset Management, for your time here on Business Talk.
Thanks very much, Michael.